So, in the last first half of the class, we learned how to be able to pay our vendors using a regular manual check, debit or whatever credit card, not a credit card, excuse me, using the Reddit checks function, right? And to use the bill payment, right? Enter a bill and then being able to make a payment. Okay. So let's see what else can we do here. So other options that you could do is actually for any reasons that you need to and it's necessary, right? You can void a check at any given time. Okay, maybe you forgot to add something to this. Maybe you need to, since for one of the examples, one of the bills that you paid, right? They sent you an overdraft charge because you end up paying them too late. Okay, for any reasons, or maybe you accidentally wrote the wrong check date on there, whatever. Okay, you can void a transaction, and that's always recommended. You never want to delete a transaction. Okay, so in this case, right, they teach you how to void and not delete. If you delete this transaction, unfortunately, you're not able to use the same number. So QuickBooks, once again, is very, very, very smart. You cannot use the same number. All right, even if you deleted the check and said, well, pretend this check doesn't exist. Unfortunately, that's not how QuickBooks does it. It will also remember that check number 6003 has been used. Now, there's many ways that you can void a check simply by, you can just double click on this, right, to view the check and go ahead and click the edit menu. All right, and you're able to void this bill payment or void this check. Okay. But the second option that you could do just quick and easy right here on the register is you could just right click it and click void. Okay, void payment. Now, a great indicator is when I go ahead and do that, it's going to automatically say right here that it's been voided. Once it's been voided, you can't undo it, okay? And notice this, it zeroes out the check and basically it puts the money back into the bank account, okay? So for any reason you need to stop the check from going on forth, or maybe you mailed it out and something's wrong with it, this is the best way to avoid it. However, you do need to go to your bank itself and tell them that this check is voided, because QuickBooks is obviously not going to tell your bank. That's the one thing you need to know. QuickBooks is your ways of keeping track of yourself, but you need to also let your bank account know that you're trying to void a check. Okay, and even if I were to go ahead and double click on this too, it's going to also appear on here that this check has been voided. Okay, right here, it's been cleared, okay, or it's been voided. All right, so simple and easy as that. But once again, once you void a check, you cannot undo it. All right. All right, then you get this window, okay? QuickBooks lets you do this, but then it gives you a warning sign. Yes. Okay. Yeah, okay. Right. What did I do? Okay, so okay. Actions that you can take. If you want to, if you're avoiding this check, okay, I'm going to click cancel. I don't know why I can't get out of this window. Okay, I'll just click no this time. All right, there you go. I exited. So in this case, once again, it's been voided. It's right there, okay? And again, you get that error message saying, are you sure you want to do this? Okay, yes. Okay. There you go. All right, so, oh, whoops. In this case, no, I did not save it. My bad. So let's void this bill payment. Enter to validate it. Yes. Okay, there you go. Now it's for surely confirmed that you voided the check, right? Money's back into the bank, right? So again, if you do choose to void a check, yes, you do have to produce another one, okay? And yes, you do have to go through the whole process of printing it again and sending out and issuing another check. Okay, and this is a great way to do this because once again, when you void your transactions, it leaves residue, right? Or in this case, it leaves information that is necessary. So for example, right here, this bill payment has been ignored. So therefore, your bill payment or your accounts payable has been reverted. So now you still owe $142 or 46, whatever it is, and it is still outstanding. Okay, you could check your bill tracker, you could check everywhere, and it's still going to show that you still haven't paid this bill. So basically, it undoes it behind the scenes. And then here in our check register, it tells us exactly that this check number has been used. You've already processed it, you've already sent it out, and you cannot ever use this number again. And this is where you can avoid discrepancies in your checking account, checkbooks, and when you do your bank reconciliation, which is something we're going to do in chapter 5, instead of looking to find this voided check, you automatically associate it right here in the check register because it tells you that it's been voided and it's been zeroed out. Okay? So that is that right there. Okay? So next thing I'm going to talk to you guys about is using credit cards. Okay? So like I've mentioned before, because it is a vast, widely used type of form of payment, it is really easy to do. Now again, check out on your home page, you have a little icon that says enter credit card transactions. So I click on that and I get this window, and at the top of my window says this is a credit card payment or credit card purchases. Okay, so in this case, you need to ensure that you are selecting the correct credit card. Okay, so when you do QuickBooks and you set up those accounts, you will see the options that you could choose for your credit card, because yes, when you set up your chart of accounts or set up your accounts itself, you do have the option to say this is a credit card. So there you go. I only have one credit card, and it's my Visa, National Visa Gold credit card. All right, so great. I only have one credit card, and when I click on here, it tells me that you have the options to either make purchases or it's a refund to your credit card. In this case, it is a purchase. Okay. Now, of course, with credit cards, you don't get actual account balances, okay? Because in this case, right, as we know what a credit card does, right, you're racking up your credit versus owing, instead of, having an actual balance that is available for you to spend, okay? So that's the idea here, all right? You're going to go ahead and make sure which vendor you're going to actually be making a payment to. So once again, in this case, I'm going to be making a payment to the Visa Bank, National Bank, to Bay Office Supplies once again. So once again, if you guys remember, we did enter this in, Bay Office Supplies. Okay. Date, once again, is going to be February 24. Okay. Reference number, once again, this is most likely going to be either your transaction number. So oftentimes when you use a credit card, it will give you a transaction number, or this number could be found on the receipt, right? This receipt number. So in this case, this reference number is going to be number 65432. Okay, and the amount for this one is going to be $86.48. And again, you can choose to either enter it here, or you can just fill in the information and it will automatically fill the section for you. So in this example, that's exactly what I'm going to do. In this case, my memo here is I end up buying more. This time is printer ink for the San Jose location. So once again, I'm going to type it in here. Printer ink for San Jose store. Okay, and I'm going to copy this. Okay, copy, and I'm going to put this in the memo down here, okay? The more information or the more details that you put into it, the more better it works. Now, again, this expense, again, you do have to tailor it because this is using a credit card. So this is going to be an office supplies once again, okay? Because you're buying printer ink for $86.48. And once again, I'm going to make this connection to the San Jose location because I want to make sure that I'm separating my expenses based on store location. So once again, when I'm done with this, I can go ahead and validate that this transaction's done and click Save and Close. Okay. Now, how in the world am I able to view my credit card information? Such as look at view all my transactions. Any guesses? How can I actually view my credit card transaction list? No? No idea? Okay, well, you have two options. Okay, by going, so obviously if I click on enter in credit card transactions, I can't get anywhere near the transaction list. Okay, I won't be able to view my transaction. However, the way that you're able to view it is by going up to the banking account and you can use registers. And what you can do is you can do a drop down list to locate that National Bank Visa credit card. Right here, National Bank Visa credit card, and click OK. And I'd be able to find my transaction this way. So here I just entered in a credit card transaction right here for the Bay Office Supplies for the printer ink for the San Jose location, right? Other way I could do it is using my chart of accounts and accessing my account that way, okay? So once again, here I am. I'm in the register. I can do the same thing. Instead of going to enter credit card transactions, I can just simply enter it exactly like we've been doing it before using the actual account register. So for this example here, right, I can go ahead and type in that I made a credit card payment to Rodriguez Rentals, right? Let's see, Rodriguez, oh, I can't have trouble. Rodriguez Rentals for the 25th of February. So in this case, the next day, I can enter in exactly into the register just like this, right? We already know what the credit card information is. We already know that we're using a credit card, right? We're entering it into the directly into this, and the reference numbers this time is going to be 987153. Okay? And again, we're using a credit card, obviously. And this one to the vendor, Rodriguez Rentals, okay? And in this case, what account am I associating this with? I'm using this for rental equipment. Okay, so video equipment rentals, okay? For the account, let's see, do I have rental equipment? Let's see. Rental equipment. Repairs, rent, retained earnings. So in this case, I don't have that information. So what I can do here is, because this is only strictly for accounts only, what am I going to actually do is check this out. So I'm going to go ahead and cancel this right here because I can't enter it because it is an actual account. So in this case, when we talk about what's called items, this is what you have to do. So if I go into my enter credit card transactions, you have these tabs down below where you have expenses. Expenses are strictly only for accounts only. Where you have an option for items, which we will talk mostly about in chapter 8, where you're actually purchasing a specific item that you either potentially are going to sell. So in this case, right? Again, Rodriguez, okay? Again, the date is the 25th now. Oh, this is blocking it. There you go. Oh, nope, still blocking it. Okay, so in this case, I'm going to type it in here. The 25th. Again, 9877153. Again, this time is rental, or was it video equipment rental. And this time, instead of selecting an expense, we're going to select an item. So I should have rental equipment in here. I don't know why it's not in here. Rental equipment rental. There it is. Okay. And again, it's actually in my expense account, so it wasn't even an item. The amount is going to be for a total of, I believe it says $35 in your book. Let's see. Rental equipment is for $35.40 for rental equipment for the Walnut Creek location. Okay. Again, you can enter in right here. Video equipment rental. Okay. Again, in the class of Walnut Creek. Okay. And then again, I could save and close. Right. And every time I enter in a transaction, it's going to actually indicate to me that this is the account balance that I owe. Right. Go to bank. Go to, actually in this case, I will go ahead and use my chart of accounts, right, to be able to access my account here. So I go locate my National Bank credit card, double click on it, and here it gives me now I owe the total amount to my credit card is $121.88. Now, in this case, right, when I make a payment to my actual credit card, there are many ways that you can actually do it, right? We talked about entering a bill a few moments ago, and then we actually talked about actually writing an actual check, right, using the write a checks function, right? Now, in this case, when we actually pay our credit card amount off, this is what the necessary things that we're supposed to do. Now, in this case, right, you only use the write a checks function if you are not sure how much you're going to make a credit card payment to. So again, right, usually what happens is you end up receiving a bill anyways, right? And then you have the option to either make a minimum payment, which is you spread a payment across in increments, right? You pay what you can, all right? And that's the tricky thing about entering in a bill, because when you enter in a bill, you need to know the exact amount that you're going to make a payment to. All right? Because once again, you don't want to transfer this credit card amount and convert it into a bill, because then you're going to have to make a payment for the full amount. And that's where you do not want to do. Okay? So those are the two options that you can choose to make a payment, right? But if you're really good at making payments for everything that you do, right, and you know exactly that you're going to make that whole entire payment for $121.88, then go ahead and enter a bill and choose the date that you're going to pay off the credit card, okay? But once again, that's the thing about paying credit cards, is sometimes you do have that option to not have to pay for the whole thing right away. You do have the option to either pay the minimum or pay as whatever much as you can. So let's say I do know I'm going to pay half of it. Then enter in a bill saying that you're going to make a payment to this credit card for half the bill, or $50, right? Straightforward. that is what it means when you enter in a bill. But if you're not quite sure and you're waiting till the payment due date is coming up, then make your decision. How much are you actually going to pay your credit card, and just use the write a checks function, because then that kind of gives you freedom and you don't have to go back and edit the bills, or you don't have to modify, or you don't need to make a commitment and then change it back. Okay? So that's the options that you can do here. So how do I go ahead and use the write a checks option? Straightforward, right? You just simply write a check. Okay? So again, I'm not going to enter a bill because let's say I don't know how much I'm going to pay. All right? So in this case, I'm waiting till the payment due date, right? I'm obviously going to, receive the bill regardless. And it's going to tell me what my payment due date. Most credit cards are date driven, meaning they're due on the same exact day of every single month. Okay? So I should be aware, if I have been using this credit card for quite some time, I should be aware of when the due date is. So I don't necessarily have to enter it in and enter bills unless I have way too many stacks of bills and I can't remember that I'm supposed to make a payment to my credit card. Then you're more safer off using the enter bills. But in this case, this is exactly what you're going to do. If I'm going to write a check, I'm actually going to write a check from my checking account, and I'm going to make it payable to my National Visa credit card. National Bank. I should be able to have the option to pay National Bank Visa credit card. Let me see. Pay credit card. Enter bill or write a check. Write a check to National Bank. There it is. National Bank for March 1st. All right. What amount am I going to enter in? Again, it's subjective to how much you want to pay. Let's say, you know what? I can afford to pay the entire thing. So because I'm making a payment to the entire credit card, I'm going to say for the $121.88, right? I know I looked at my bill and said I'm going to make a whole entire bill payment. So once again, I'm going to make a memo here that this was credit card statement balance due, whatever that you want to put in there, okay, as of February 28th, okay, whatever amount that you want to put in there, whatever details or memos that you want to put that, this is where you don't have to write whatever is in the book, okay, you can do a little free range on this one. And again, the amount or the account that you're going to be doing it is the National Visa Bank Visa Gold credit card. And again, this is not going to be for a class, because in this case, the credit card could be used for both the store location. Now you can choose if you have an account that's directed to both the accounts. And in this case, it's subjective, right? If you have an account that exists for that, then go ahead and select the account. But if not, then we're just going to go ahead and use that, and we're going to make it available to be printed later, which is already there, okay? For the checking account, printed later. So notice that I don't have this, so you just drop this part down right here, and I want it printed later, right? Everything looks good. Save and close, okay? And it says you need to assign in a class. In this case, I'm just going to save anyway, because even your book doesn't say you have a class to do it, because it's a credit card. You use it for both stores, so it doesn't matter whether you make a payment for San Jose location or make a payment for the Walnut Creek. So in this case, I don't need to assign it in a class, okay? So that's how you can pay a credit card, right? You can either pay it using write a checks or enter it in as a bill. But if you do enter it in as a bill, make sure you know the amount that you're going to make a payment for. Because if you're not sure, then the best suggestion is to wait till the end where you get closer to the due date, or when you're actually going to make a payment to it, and just write a check. Okay? Any questions there?
No.
Okay. All right. So now we're going to be doing a pay credit card. We already did that. So next one's going to be vendor credits. What is a vendor credit? Well, oftentimes when you make purchases from specific vendors, right? We already took a look at using a discount. Now, what's the difference between a discount and a credit? Well, in case you are unsatisfied with the products that you purchase, right? Maybe you got shipped defective items, or maybe you got shipped the wrong item, but they convinced you somehow to keep it. And they kind of try to reprimand you, saying, "Hey, I'm going to give you a generous portion amount of money, so then I can mail it out to you, so you can use it for a future purchase." That's usually what happens. Okay, when you're unsatisfied with a product and you tell your vendor, "I want a refund," that is where a vendor credit is going to come into play. Okay? Now, how do I activate a vendor credit? Simple. For all the ways that you're able to enter in a bill, you are able to enter in a credit. Okay? So I'm going to go ahead and click on that bill, enter bills. And if you look very, 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 very carefully at the very top, you have the option to write a vendor credit. Okay? Now, here is where you need to keep a clear mind. In QuickBooks, it will refer vendor credits as a vendor credit. When you're dealing with a customer, it is a credit memo. But if you go out into the real world, a credit memo could be used for both a vendor and a customer. But in QuickBooks, we don't call vendor credits credit memos. No, we don't. So make sure you are clear and aware of this, because you may be tested on this on the certification exam, saying, how do you do a vendor credit, or what is a credit memo? And you need to know the clear difference between the two. Okay? However, in real life, in the real world, credit memos are both used for vendor and customer. Okay? So in this case, we're going to take a look at a vendor credit. Okay? So if you remember, we use the credit card, we need to enter a bill in first and then apply the actual credit, vendor credit itself. So in this case, we need to enter a bill in first before we can actually enter in our vendor credit. So in this case, we got Nellis. Okay, Nellis is right here for what date? Okay, let's see. Enter a bill Nellis for, again, you can do retroactive transactions. So this is on February 17. Okay, and this was for 5088, and for this was the total amount of $300. Okay, for custom frames. Okay, again, I'm not going to put it right there. I'm actually going to go ahead and put this in the memo that this was a custom frame. Okay, and again, in this case, we are still going to use the cost of goods sold, because that's the correct account, right? We're going to use the cost of goods sold expense account, and we're going to make this available so for $300, to our famous person, Mr. Bob Mason. Okay? So I type in Bob, and there he is, Mr. Bob Mason. And Mr. Bob Mason belongs to the San Jose location. Okay? For $300, right? We need to enter in the bill first, because this is where we purchase the item, and then they're going to give us a vendor credit. Okay, so that's the very first thing you got to do. So save and close. Okay, now the next thing we're going to do is now we need to actually apply a vendor credit. So once again, we switch it over from bill to credit, and we're going to be entering the same exact information. And what they normally always say to you is use the exact billing information, but add a letter C to make a reference that this credit is related to this bill. Okay? You don't need to use C. You can use any other letter, right? R for refund, R for revision, whatever way that you want to use it. You don't necessarily have to use C. That's usually just recommended, because credit, vendor credit, C, credit, you get it. And this time, what we're going to be doing is we're going to be receiving a vendor credit for the amount. Okay, so enter credit Nellis for the 588C for a total of $25. Okay, $25. All right. And again, it's going to be for the same exact account, which is the cost of goods sold. And let's go ahead and, right, again, class, you don't really need to have a class because we haven't applied the credit yet. So in this case, I don't need to have a class. So I'm going to go ahead and click Save and Close. Okay, and again, it's going to tell you this. You need to save anyway. All right. So this is how you are able to apply the vendor credit by simply going to the Pay Bills option, right? Where here we're going to pay, right? We're not going to pay Wong & Son, okay? We're going to pay the Nellis custom framing. Now notice this. Remember we talked about this earlier, right? We have set discount, and then we have the section for the credit. And notice this, you have one credit available for $25. So what I'm going to do is I'm going to click that set credit, and this is where you're going to add all your information. So once again, you have your credit for the $25 for the Nellis thing, right, that we just received. We're going to go ahead and click done, which is verifying that it's that. We click done, and when we apply it, boom. Therefore, I don't pay $300. I only pay $275. And that's how you apply a credit. Most cases, it will recognize it automatically. So you may just click that set credit just to make sure that that's the only credit that there is available. But most cases, QuickBooks is smart enough because it tells you right then and there, right? So what you're going to do is, now that you've entered in this bill payment, right, for invoice number, or in this case, bill number 5088, and the date we're going to have it is going to be on February 22nd, okay, February 22nd. Once again, save this to be there, apply credit, boom, boom, and then, again, it's a check. It's going to be printed later to the checking account, and then done, okay? So once again, there's a huge difference between a vendor discount and applying a credit. A credit is when you get money back, or maybe you purchase something from them, returned it, so they issue this credit that you can apply to an invoice. So there's many reasons that you could have a vendor credit. And then again, I'm going to click done. I'm not going to print any more checks for the day, okay? So any questions in regards to vendor credits?
No, not from me.
Okay. All right. So the next small section here is going to be what's called a vendor deposit. Okay. Now, any company that you really go towards or go to, you'll often, like if you're a first-time customer, oftentimes they'll give you a friendly discount. Oftentimes they don't trust you, so they ask of you a deposit. Okay, very, very common of a business tactic, just to ensure that you are committing to the order that you are requesting. Exactly, right? It's just a company guideline just to ensure that when they do the job, you're not going to flake on them, and that you, end up not going through with the commitment. So at least this part, at least they have you at least paying for half the price or whatever amount that you agree on. Normally it's 50% off, normally it's a 50% down payment or deposit, and this is how you do it. All right. So first, what we're going to do here is we're going to recognize that in this case, right, I'm going to be recording a deposit. Now, what I'm going to do is I'm going to write a check, because I am writing a check to the vendor, right? I'm making a deposit, okay? So in this case, I'm going to use the write a checks window, right? Okay, so again, you're here, And again, of course, when you do a vendor deposit, you're paying right from your checking account. All right. Now, in this case, instead of making my accounts available to anything, what am I actually going to do is I'm going to make this available as an accounts payable account. Okay, so we'll rerun. What do you mean you're going to make it available to accounts payable? Now, in this case, right, that means I'm going to say that they owe me services, or in this case, I owe them services or something like that, right? So in this case, right, a vendor deposit is more or less saying that I'm going to make a payment for something that I owe in the future. And by applying this deposit, it's supposed to reduce the amount that I owe, or in this case, reduce my bill. And that's exactly what you're going to do. So in this case, right, you're going to make this account or make this vendor deposit available to an accounts payable account. And again, we're going to be making this available to, let's see. Okay, so Reddit checks.
Accounts payable?
We're making an accounts payable, but I'm looking for who we actually make this payment to. So again, it's going to be Rodriguez Rentals. Okay. Rodriguez Rentals, okay? And again, we're going to say this is a deposit, okay? And again, we're making this account to accounts payable. So let me, okay? Accounts payable, right? Because we're saying, well, we're making a payment to something that we owe. And for this amount, I believe we are making this deposit for the amount of $200. And it's for the Walnut Creek location. Okay. Once again, make sure you tag this. This is for to the same person, because again, I'll show you why this is necessary, especially when you're linking specific jobs to specific things. You definitely want to make sure that you have the same vendor name as the same person that you're making a check available to. And again, this is for the Walnut Creek location. Okay, so save and close. All right, so there you go. I wrote my vendor deposit into my checking account. Okay, I wrote out my deposit. So now the next thing to be able to utilize it is you are going to go ahead and enter in a bill. Okay, so when I enter in a bill, what's going to happen is I'm going to create. So I'm going to enter in the bill. Okay. For Rodriguez, once again, it fills out the information here, and you're going to make this vendor deposit, right? We're going to enter in the bill. Oh, actually, hold on. Yes, for Rodriguez Rentals for the 22nd. Good. And again, reference number is going to be 1352. 1352. And the amount this time is going to be for $185. Now hold up. Wait. We actually have a amount where we're actually supposed to be getting a refund for, because in this case, right, my bill ended up being less than what I originally made a deposit for. Okay, so in this case, I'm just going to enter in the bill. Okay, for, let's see, did I even? Okay, so we're going to enter the bill for Rodriguez for, again.
Well, it started out as $200. Then, so you made a payment for 185, right?
Okay, so in this case,
You paid 155.
we need to enter in a bill for, in this case, no, because the bill's supposed to be less than that, right? And then when you apply the credit, then it will revert that way.
Oh, okay.
Mm-hmm.
Okay.
So in this case, right, the service has been done. So now, because you already made your deposit, right, it ended up covering more than it is. So it says right here to enter the bill and to create a credit. Create a credit. There you go. Create a credit and apply to bill. So in this case, right, we're looking at a vendor deposit, right? We're going to be entering the bill for the 22nd with a reference number, like I've mentioned before, for $185. Make deposit to Rodriguez Rentals, okay? AP refund check for the $15, okay? So in this case, we're going to enter in the bill just exactly like this. Once again, we usually normally use Rodriguez for rental equipment. So rental equipment or equipment rental. Equipment rental, okay? We're going to leave it like this because that's the bill, okay? The bill says that it's supposed to be for $185. Now again, it's going to be for the Walnut Creek location, and I'm going to go ahead and click Save and Close. So what's going to happen now is when I enter in my bill payment, okay, I'm going to go ahead and click on this Rodriguez, and what's going to happen is I have another credit that I can use, and this time it's for $200. So, but my bill's only for $185. Well, in this case, what I actually have to do is I need to recognize that I have a $15 deposit. So what I actually have to do is now, not only am I going to be receiving $15 back, I actually have to make that deposit first because I know I should be getting $15 back. So therefore, what's going to happen is you're actually going to be receiving a check from Rodriguez, right? Because you end up overpaying. So here you go, Rodriguez Rentals from the accounts payable account, right? Accounts payable. And this time the memo is going to be vendor refund. Okay. And then once again, the check number, let's see. I don't remember what the check number is, but that's okay.
423.
42423. And again, you're going to make this print method obviously a check. Okay. And the class is Walnut Creek once again. And the amount was for $15. Okay. So I'm going to go ahead and make that deposit. Now I can finally go to my pay bills and be able to select this, right? So in this case, it's showing that I have 2 items here, which is fine. That's normal. So what's going to happen is now I select those 2 bills. So that's exactly $200, right? And that's exactly what I'm going to do. I'm going to apply this bill credit right here for $200. And basically it's going to zero out this $150 plus the $15 equals $200. So therefore, my total payment is going to be zeroed out because I am recording the deposit. So in this case, I don't think I'm supposed to check this off. But at the end of the day, I already recorded that I received my deposit, right? Or that I'm using my deposit. In this case, I overpaid. So I deposited the check that they sent me for the $15 of the overpayment. And boom. That's how I create a deposit, and that's how I get also a refund at the same time for this one transaction here. Okay, so I made an advance payment for $200, but the bill ended up saying, well, sorry, we were short a person, so, or we end up discounting you or something like that, right? So they refunded us a check for $15, and here they billed us for $185. And this is how I apply the $200 voucher, because that $15 already went back to me, and that rest of the money is going to pay off this bill. All right?
So now do you have to write a check out for the $15 to send it to the customer?
No,
Or
this is
do we just credit their account?
that's exactly what we just did. Remember, that was the first thing I did in my window. I deposited the $15 back because that I already gave myself the refund, and that's where it is right here. That's the $15 refund. So in this case, I am done with this transaction. Save and close, and boom. All right. Any questions in regards? So that was a confusing one because that dealt with 2 factors in one example. Okay. Any questions?
And that's page 155?
Yes, I haven't kept track with the book, but yes.
Okay.
Mm-hmm. All right. See if we're good on time. Okay, it's 11:15. So next few things that I want to show you is, okay, so there is a small section where it teaches you how to make your payment for sales tax. I'm going to save that for chapter 3. We're chapter 3 where we set up sales tax, we manage it, we pay it, we create it, and all that jazz. So in this case, I'm saving that for chapter 3. So in this case, you could skip that section where it says to make payments to sales tax. All right? And a few things. So what I'm going to actually tell you here is reports are only important to you depending on what position you are in the company. So if you're HR, your main job is to focus on your payroll people, right? If you're accounts payable, you're in charge of entering bills, paying those bills, and making sure that those checks are issued out. Okay? If you're in charge of sales, you must keep track of all the sales that you make. You need to keep a track record, right? So, and then again, if you're inventory manager, you need to keep an update on how much stock available you have. Those questions and depends on the exact position that you are in the company. So therefore, all the reports that are created are tailored specifically based on a question you're asking about the company. Now, if you're an HR, would you even care about a sales records, a sales reports if you're HR?
No.
No, you don't need to run a report on a sales report when your main criteria is just focusing on paying the employees, making sure that their year-to-date payroll liabilities, expenses, whatever that there comes into with the HR position, you need to make sure that report is being done instead of focusing all your energy on sales reports. So that's why I kind of glaze through on this part, just because again it's only necessary to run these reports if you are in that particular position. So in this case, chapter 4 was all about vendors and payables. So again, if you click to reports and you go down to the drop down menu where it says vendors and payables, here's a list of reports that you can create if you are the accounts payable position, right? We just checked out the unpaid bills report, right? You can look at vendor balance details, right? Accounts payable aging, meaning how often do you pay your bills off? That's what that is. Okay, here you could take a look at your sales tax liability because once again, sales tax is a person you pay. It's a person you owe. It's the state that you owe, the county you belong to. So yes, that's considered like something that you owe, a vendor that you owe, which is the state and local government. Okay. So again, I'm not going to have time to go through all of this just because once again, it's only important to you if you're in that position. And if you're not, you don't need to know any about these reports, but this is the list that you can do. Okay. So again, I'm going to be skipping over reports if, here and there, because in chapter 6, we talk more along the lines of each and every single one. Okay. So that's that section there. So last section of this entire chapter, okay, so I only got 10 minutes to explain it, is a new feature that's going to be introduced into the new 2020 version of QuickBooks, okay? And you do need to have Premiere to be able to have access to this, okay? So for those who don't have Premiere, okay, that's okay because your book comes with Premiere, okay? And that's going to be using the Loans Manager, okay? So if we go to the banking menu, which is the only location you're able to access this, okay? You click on banking, you're going to locate Loan Manager, okay? Now, oftentimes, a lot of businesses, especially small businesses, you're more likely to be inclined to apply for a small business loan or a small personal loan that you can apply for a business, right? or we call this a commercial loan, right? Most major big companies, corporations like that, don't necessarily need that, or a consumer loan, that's what it's called. Okay? So in this case, right, this is more for geared towards smaller businesses, right? Or for any instances that you get a truck loan, right? You need to buy a car, right? And you sign up with them saying, hey, this is what I need. I'm going to borrow money from the bank to go ahead and lease me a car or help me buy a car by getting a loan. So that's exactly what a loan manager does. And what it does for you is it helps you calculate the amount of APR that you're going to be collecting. It reminds you on your payments. It allows you to give you the number of payments and allow you to separate all of that in stuff included, right? Because as we know, the thing about loans is it's going to be a price value that's already included the interest. And that's why when you go to the bank, right, they give you a number, they spit it out to you saying, here, this is how much you owe me, right? You can't negotiate that number. You have to agree to it. And that amount includes the interest. It's already pre-calculated. So what QuickBooks does for you, it helps you facilitate that, especially when you make multiple payments, because if you did not know, for loans, you can make multiple payments and you can actually, instead of paying everything to interest, usually your first payment will all go to interest. The second payment, you can actually give the option to make a payment to your actual principal, okay? Because number one thing is that they'll always do this to you, depending on what bank that you sign and agree with the loan. Make sure you read that fine print, because sometimes they make you pay all the interest in the first couple years and then you actually start paying your principal. So you want to be very, very, very careful and read that fine print and make sure that when you sign that agreement that you're paying not only the interest first, but you're also making some payment to your actual principal, okay? So that's a little tangent there, a little FYI. So here's the loan manager. As you can see, it looks very nice and clean because I don't have a loan yet. So in this case, I have the option to add a loan, right? So that's what I'm going to do. I'm going ahead and going to add a loan. Now, in this case, you do need to actually set up these accounts prior before actually doing this. So you need to set up your truck loan or your business loan, whatever kind of loan that you have first before actually setting up this right here. So this account right here, the account name is going to be truck loan. So as you can see here, they found it for me, truck loan. Okay, there you go. So I have a truck loan. And right now, because I've entered in my account balance, was $24,000. Okay, so once again, I'm going to go ahead and again, bank loan is going to be your truck loan. Okay, so again, you must set up this information prior. So here you go. I have this set up the truck loan for $24,000. Now, who's your lender? Okay, in this case, if you know who, obviously, you're going to know exactly who it is. So in this case, it is National Bank. Okay. Now, in this case, what was the origination date? Which meaning is going to be what was the date that you actually acquire the loan, or when did you actually purchase or sign the contract of your loan? In this case, the origination date is going to be December 31st of 2020. Okay, so truck loan, $24,000, National Bank, for 60 months. Okay, so in this case, original amount, again, is the $24,000. Okay, the original date that we had it was December 31st of the previous year. Okay, and again, how many payments, or in this case, terms do you have? In this case, I have 60 months to pay off this truck loan. Okay, and then I'm going to go ahead and click next. So now it's going to ask you what detailed information. When is your first due date of the next payment period? In this case, it should be January 31st of 2021. Okay? And by making this date available, right? What you're setting up here is you're setting up payment plans. So that means at the end of every single month, you are subject to pay this amount. And in this case, this is what you received from the bank because it tells you right here that you owe, that means you need to make a payment of $452.16. Every single month. Is it 452.16? 452.16.
Yeah, that's right. 452.16.
Right? And you're making it every month. So that means you're going to get a bill or you're going to get a reminder every single month that, hey, you have a loan payment to make. Right? And again, it says, and then this question says, does this loan have any escrow payments? In this case, no. We're not getting a house, right? We're not doing that. So you don't need this. You can ignore that. So again, a total amount of payments, right? Again, you definitely don't have any total amount of payments for now. So you can ignore that because right now, again, you haven't made a payment yet. So we're assuming that today is the first day we're going to make a payment. Okay. And I'm going to go ahead and click next. So now it's going to actually tell me how much annual percentage am I going to be charged every single time. So in this case, it is 5%. Which is pretty decent. It's not bad, but it is going to be it's going to be accrued every month, right? Every month you're going to be charged or calculated 5% interest every single month. So that's a lot. This isn't an APR, but you are going to be accruing it every single month. Okay? Or it's going to be included into the billing cycle every single month. Okay? So then after we've done that, right, the payment account is going to be bank interest expenses. So here is the payment account for the bank interest. Okay, of course we're gonna make the payments out of our checking account, and the interest expense account is going to be bank interest.
It just says interest.
It just says
interest expense.
Insurance, interest expense. There you go. Interest expense. Okay. And again, this account, which it says right here, the fees and charges are going to go to your bank service charges. Okay. And then we click finish. Okay. So there we go. Now we have our bank loan. So now, because we added our bank loan, here's your options right here. So it says right here that you have a payment pending for $452.16, and your still total amount due is still $24,000. So here you could do is you could set up a payment, you can edit the loan detail, or you can actually remove a loan. In this case, I've already entered in my loan, so I'm subject to have to make commitments and make my payments. So this is where I click set up my payment. So in this case, right, we're going to set up our payment, and again, we're going to make sure that it's our banking account, okay? And we're making a regular payment. What does it mean by a regular payment? So this is where you have the option, okay? Most cases, depending on how big or small your company is, if you can afford to make multiple payments to lower the amount of principal, then go ahead and do it. And this way you're able to pay off your loan a lot quicker. In this case, most cases, for regular individuals, it's not very easy to be able to make extra payments. If you have the funds available, then you make it. But in this case, I'm only going to set up a regular payment. Okay? And of course, it's going to give you the information, Truck Loan National Bank, and it's coming out from your checking account because that's exactly how we set it up. So in this case right here, gives me my payment information. It tells me that $100 is going to go straight to the interest, while the remaining $352.62 is actually going to go to your actual principal. Now, in this case, this is obviously a rough amount. This isn't the exact amount because you will get the billing statement of the exact information of how much interest was actually collected from you or charged for your monthly statement. So in this case, again, it's not as accurate, I believe, unless 24,000 times 5% is truly $100. Okay. So in this case, you can actually, now this is where if you make a second payment, you don't need to pay the interest because you've already made the payment to the interest in the first place. So this is where if I'm making a extra payment, I don't need to pay the interest. I can choose how much I'm going to pay, right? I don't have to pay the billing amount. I can pay $500, I can pay $600, I can pay $1,000. I can make my second payment, say whatever it is, and I don't need to pay into towards the interest. So that's the cool thing about this is that you're able to control how you make a payment, but that's only if you're doing an extra payment, okay? But by terms and everything, usually on your first payment, you do pay a portion to the interest, and then whatever remaining goes towards the actual principal. So that means out of my $24,000, I'm only making $352.16 payment instead of $452. Okay. So in this case, once everything is done, now the next thing is I want to write a check or enter a bill. In this case, I want to enter a bill. Okay. And once again, once you have all this information here, you're going to make a payment, 100 to interest, and the remaining amount goes to your principal. You're going to go ahead and click OK. And of course, once you've done that, your bill will pop up giving you two accounts, one to the truck loan and one to the interest expense, set up automatically for you. And all you got to do is you got to enter in the date that you received this bill. So in this case, we received it sometime in January, right? Okay, so let's say we received it January 18, and of course, so bill due date, so again, we must have received it on the 31st, actually, right? So that means the bill due date's net 30, so that means it is due January 31st. Reference number, once again, whatever bill that you received is going to be the reference number. So in this case, I don't have one, all right? And again, a truck loan, you don't need to separate it unless you're having that truck only stationed at the San Jose location. Okay, save and close. And again, you need to enter in you have changes and you want to say yes. Okay, and again, it says to assign a class, in this case, save anyways. Okay, and that's how you use the loan manager. And now you can see that it's using the accrual, right? We haven't paid yet, but what happens is they converted that special amount, the $452, right, including the interest. And here, it has now updated your loan to be $23,647.84. Okay, so that's what's cool about this. So now we have to pay a bill, we have to do this and that, and we know how to do a bill payment. Okay, any questions in regards to the loan manager or anything we learned in chapter 4?
No.
Okay, so perfect. We have just enough time to go over our review questions, multiple choice questions at the end of the chapter. So let's go ahead and fast forward in the book. Okay, so we should be fairly close to the very end. Okay, I went too far. Okay, there we are. Oops, expenses problem. Keep going. All right, here we are. One more.
169.
169. There you go. Okay, review questions. Once again, these are questions that you could test yourself once again. These ones are more elaborative questions, but the ones that I want to focus on is going to be the multiple choice. So once again, please select the, so please select the best answer for each of the following. So number 1, okay, you may record a payment to your vendors by
D, all of the above.
D, all of the above is correct, right? We talked about that. We talked about recording a manual paycheck, manual check by putting it directly in the check register, right? We used the write a checks function and we entered a bill and used bill payment, right? Those are the three main ways that you can enter in or pay a vendor. Okay. Number 2, okay? To display the vendor center.
I got D as in David.
D as in David, A, B, or C. So that is correct. A, by clicking the vendors on the QuickBooks homepage. Yes. Again, by clicking the vendor's icon on the icon bar. And of course, by clicking the vendor's menu and then selecting vendor center. Yes, all three options are the exact three options that I showed you today in class. Okay. Number 3, you can add a vendor when?
D.
D, at any given time by selecting new vendor. Yes, you're not required to enter a vendor only when the time permits. No. No. Right? You can even quick add vendors, right? Quick and easy. You can add them in at any given time. All right? Number 4, which statement is true?
I got B as in boy.
B as in boy. Let's take a look at this answer then. Okay. B says bill payments increase the balance in both the checking account and the accounts payable account. Now let's take a look. Bill payments. Are you increasing checking?
No.
You're decreasing
You're
checking.
decreasing, right.
And are you increasing accounts payable?
No.
No, you're decreasing it. So in this case, B is not the correct answer.
Let's say A.
A is the correct answer. QuickBooks records each bill payment in the bank account register or credit card account. Okay, register and accounts payable. Yes. Right? Entering bills will record each bill payment in both, whether you paid with a credit card or checking account, and the accounts payable account. Yes, that's correct. Okay. Number 5. Okay. Which QuickBooks feature allows you to separate your income and expenses by line of business, department, location, profit centers, or any other meaningful breakdown of your company?
B.
B.
B as in boy, class tracking. Yes. Okay. When we talk about people or customers, that's going to be job costing. Okay. So make sure you know the difference between the two. If it's people, job costing. If it's anything that's an item or something like this, where it's a department, it's a topic, then it's going to be a class tracking. Okay. Number 6, if you void a bill payment check, all of the following occurs except.
I got D. D as in David.
D as in David, the accounts payable account decreases. Okay, so again, bill payments. Yes, a bill payment. You're essentially paying off what you owe. So yes, your accounts payable will decrease, okay? Checking account bank balance increases. No, it doesn't. You're paying off a bill. So therefore, you're spending cash. The bill becomes unpaid. No, because the bill payment pays off the bill. So it's still going to be paid, not unpaid. And then QuickBooks retains a trail of check numbers, but the amount becomes 0. No. Of course, A is obviously the obvious answer that's not correct. Number 7, if you want to track the expenses for each customer or job.
B as in boy.
Number 7 is not B. Okay, so you don't use the pay liabilities function.
As in cat,
What was that?
letter C.
Letter C, you list each expense with the customer or slash job within that applies. Okay, so again, when you enter in a transaction, you have that little window where you can actually attach a person's name on there. And that is when you want to assign expenses to a particular person. So in this case, letter C is correct. Okay. Number 8, okay? To make a loan payment, you can.
D as in David, all of the above.
D as in David, all of the above. Well, let's take a look. A, select the loan liability account in the chart of accounts and choose make deposit from the activities menu. In this case, what do we have to know when you're making a payment to a loan liability? You have to include the interest. So in this case, you shouldn't do it that way, because you have to remember that a portion of the money isn't going towards the principal, right? If you do that, you're directly paying the principal. Okay. B says choose pay loan from the banking menu. Okay, in this case, we didn't talk about the banking menu, and there is no such thing as pay loans. So again, let's take a look at this, right? Do you have an option if you go to banking to pay a loan? No, you only have the bank loan manager. So in this case, no, B is not the correct answer. So then the only option left is C, which is to use
C.
the loan manager to be able to set up, because it calculates the interest for you and so on and so forth. So C is the correct answer. Okay. Number 9, when a vendor credits your account, you record it in what?
B.
B, the enter bills window. Yes, remember, wherever you can enter a bill, there's a top of the button. You can toggle between bill and entering a vendor credit. Good. Number 10, which account type should you use to track petty cash? I did not talk about petty cash because this is more relevant in chapter 5, but go ahead and give it a shot.
I said checking. D. D as in David.
Number 10, it's not a checking account, because once again, petty cash is a separate bank account.
But we
Right?
use the checking account to fill it and to create it, right?
That exactly, you're correct. But that means if you're using the petty cash, right, in order to fund the petty cash, you're using checking, right? The question is,
Right.
how do you set it up? What account would you set it up as? You can't have petty cash and checking to be the
Oh.
same.
Right. Okay.
So it would be a separate bank account. Okay.
All right.
So again, I did not talk about petty cash. C as in cat. C as in cat, a bank account. Okay. Number 11, the vendor balance detail report. What does it do?
I got A.
A is correct. Shows you the detail of each bill and bill credit discounts and so on and so forth. Bill payments on an individual vendor. That's correct. Again, I did not go through it because is it necessary for you to know this? If you're not a person in the position of accounts payable, then no. But if you've ever done it before or do it on your own, it should give you all that information. Okay. Number 12. Okay. Number 12 says, what is the accounting behind the scenes for the bill payment window or pay bills window? Sorry.
I didn't
B.
answer this one. I didn't get this one.
What was that?
B.
B as in boy, it debits the account for accounts payable, and it decreases or credit the checking account. Yes, because that's true, right? when we credit or when we increase our liabilities, right? We normally credit our accounts. But in this case, we're decreasing it. So if we're decreasing because we're making a payment, right? We're lowering what we owe. You therefore need to debit the accounts payable account. And therefore, you need to also decrease your checking account because you're paying money out of your own pocket to decrease this amount that you owe. So in this context, if you understand accounting, B is the correct answer. Okay. If you're not quite sure about accounting and not quite sure how to use the debits and credit system, that's okay. That's what the accounting is for, and that's something for those who haven't learned it yet will understand it later. Okay. Number 13, it's best not to use which field, okay, in the new vendor's setup window.
I said D as in David, terms.
Who else? Someone else had another answer?
A.
All right, the correct answer is indeed A. Opening balance. Why? Okay, I mentioned this last week on Thursday. The most important thing about utilizing the open balance is that if you do use it, you wouldn't be able to associate what bills were there, how much bills there were, how much you owe, because you're putting in an account balance in there. You're already creating an account balance, but you're not making an association of what bills created that account balance. So it is written in your book that it is definitely recommended for not to use the open balances, and they prefer you to just enter in the bills with the correct dates that you were billed at. Okay, just to create the account balance in each vendor account. Okay. So terms, it's not necessarily useful in regards to this because again, vendors can change their terms on you, but again, it's helpful so then you don't have to fill that in when you receive a bill. Okay. Number 14, in the pay bills window, you can sort the bills by
D.
D, yes.
D, all of the above. Yes, we just talked about this, right? You can choose by due date, you could choose by vendor, and you can select by discount date as well. So yes, that option is something you can toggle. Last but not least, question number 15, which statement is true in regards to bill payments?
I didn't get that one.
That's okay. Anybody want to try and guess?
I'm gonna say B.
B as in boy is correct, right? Because when you pay a bill by issuing a check using the pay bills window, QuickBooks will in fact record each bill payment in the checking account register. So if you remember, right, the difference between an actual written check and versus a bill payment, it tells you on the check register, so you know what happens when you actually pay a bill versus actually just writing a simple check to pay for a simple expense. Okay. All right, good job, everybody. That is it for chapter 4. Any questions in regards to chapter 4?